Hey everyone, Dave Genderos here. Welcome to my YouTube channel. This channel's focus is wealth creation, ways to generate streams of income, online, offline, just in life in general. I share any information I may have, anything I'm doing, and I hope that you take away some good information and lessons learned, and you take some action and start down the path of creating streams of income that are earning money for you while you sleep. So if you're interested in that type of information, please consider subscribing to my channel, clicking the little bell, liking, sharing, commenting. Let's build the subscriber base up to 2,000 members. I mentioned in all my videos that we're going to do a giveaway when that goal is met. So we're at 1.13. We're almost there. So keep sharing. Share with other people that you might think have the same interest in generating some wealth, and we can grow this community. And more importantly, when you come to my channel here, if you're looking at the video, just make sure that you look in the video description, because timestamps are going to be there, and that way if you don't have time to watch the whole video, you can jump around and check out what the video content's about and hop to different areas. And more importantly, when you're doing your charting, you can go back and take a look at the coins or some information. If you want to jump around, this is an easy way for you to do that. So also, just in case you're not aware, this is not a financial advising channel. I'm not a certified financial advisor. I'm just a guy on YouTube sharing my technical analysis, in the idea of sharing my knowledge with you so that you can learn the skill set and become able to do the technical analysis for yourself. So try to replicate everything I show you here. Practice, practice, practice. That's the only way you're going to get better at any kind of skill set. So, but I just do want to make sure that you don't consider this financial advice, because that's not what it is. It's more for training and educational purposes. So please keep that in mind when you come to my channel. Don't expect signals to buy in and sell out. Basically, it's all demonstration purposes for learning how to create that trading pattern for yourself. All right. So other things I want to mention here with the video description is I'm asking you guys for some feedback on what you want me to talk about. So please consider commenting in the video area and let me know what you want me to talk about for you guys. So anything on this list I could talk about, anything that's not on this list, put it in the comments. Maybe I know about it and I can share more information with you, or I can learn with you guys. I can learn with you guys and then share what I learn. So, consider that. Some actions to take, like I said, consider subscribing to my channel and clicking the little bell, and you'll get notified when I put out new videos. And more importantly, when that 2,000 subscriber threshold is hit, we're going to do a promotional video for a giveaway. So you want to know that, that video is put out and we hit that goal so that you could be part of the free giveaway. I'm planning on giving away some crypto when that goal is met. And then finally, there's some areas of ways to contact me off of YouTube. If you want to become a friend of mine on Facebook, make sure you send me a little message that you found me on YouTube and your interest and stuff, because I look at your profile, and if I don't see anything interesting about your profile that tells me that you're someone online that's doing online businesses or are looking for streams of income, I get a lot of friend requests. That's all nonsense. So please just take a moment and just say, hey, I found you on YouTube. Very simple. You don't have to go into a lot of details. Just let me know where you found me so that I know that you're legit and you're not a bot or a scam. So again, I only typically, if I look at your profile and I don't notice anything business oriented, then I just kind of just think that it's a fake. So there's a lot of fake accounts being made, a lot of scamming going on. I guess with regards to that topic, be very careful on the comments. You're going to see bots or programs that are going to just come in and start commenting and drive you to a WhatsApp page with a phone number and tell you to contact this person to make BTC. It's all a scam. So be careful. I will never tell you to do that. If we're on Facebook or something else and we're messaging real time and we're talking, then you know it's me. But don't go to a random WhatsApp page because you see a comment saying that you can make BTCs and this trader has made me so much money, it changed my life, blah blah blah. It's all BS. So don't fall for the nonsense. Be careful. There's a lot of scams out there. Also, final thing about the video description, there's some other videos that I list here that's in the technical analysis. If I'm talking about technical analysis or whatever I'm talking about, there'll be a set of videos in the video description that you can go look at to find some more information about that topic. So please look in the video description. You don't have to go searching my whole channel. You can see the latest from newest to oldest, as many as I could fit in the description before it tells me I hit my limit. I'll list from newest to oldest so you can go back and take a look at these things. And then finally, this is just here to kind of help in the YouTube searches for users that are looking for this type of information. They'll ideally find my video and be able to get the information that they're looking for. And then, of course, like I said, consider subscribing. I mean, I'm getting some good feedback here, and even if I'm not looking at the coin right now, if it's a coin that you want me to just give you my opinion on or do some TA on it, so that you could practice your TA on it, then put a comment. Let me know. Unless you guys tell me what you want me to review and look at, this channel's for you. So, I'm not doing this for myself because everything I say here I know. So there's no reason for that. I'm doing this channel so that I can ideally educate you. Maybe you learn something new by listening to me, or maybe you're brand new and you don't know anything, and you'll learn what I know. And then I suggest strongly that you find 5 or 6 other channels that you follow as well. Don't just follow me. Follow 5 or 6 other people that are doing what you want to do, and take away things that resonate with you from each person. And then from there, you can kind of create your own identity and kind of get an idea of what's going on. So it's very important to follow multiple people, follow professional people, follow people that are successful and have what you want. So that's very important online. Okay. All right. So with that being said, I'm sorry for the long introduction, but again, if you've made it this far, great. If not, if you happen to see this area, just look at the timestamps, and that way you could jump around to the topics. If you don't want to hear all this stuff, you go right to the chart. So let's go to the charts. All right. So we're going to review Cardano, Bitcoin, Ethereum, the 4 charts that I've had over time and I've talked to you guys numerous times about. We're going to go through each one. We're going to see where we are, see where we can do some updates, and just kind of position ourselves to the latest and greatest price action and get us ready for the new moves, the new breakouts, and the new trading opportunities as seen by the technical analysis. So again, this is educational purposes, and it's just meant to assist you guys to learn the skill set of doing this on your own. All right, so ADA. So we can see that it kind of broke out of this triangle that I had here, but there's no volume. So maybe this triangle really wasn't a pattern, a matured pattern, so to speak. So what we could do here is we could see that, it's still kind of floundering in this area. So we can kind of update, this, update this pattern by just moving this to the new price action that we've seen here. And from there, we could, kind of slide this back down. So we can see there's a lot of touch points on the bottom. There's 2 touch points at the extremes on top. This is the lowest risk approach. I mean, you could come in here and you could do something like that to cross the wicks, which means that this might be the breakout here. This is legit. You could leave it like this. But so what I was saying over here with the breakout and the check, now we got to kind of realign that. So let's get rid of this. Let's get rid of this, and let's get rid of this. So this is where we are now. We could drag these to the right just to keep them, because they were active levels of resistance that we might see. Okay, this obviously is a area of resistance on the upside. So now we're, there was no price, volume, no volume like this. When you see something like this, then you could tell this is a true breakout. So maybe this triangle that we were drawing was immature. It wasn't matured. You can see it's still following this downward channel resistance. So really what we're waiting here, again, on a larger scheme here, is the breakout of this overall downward trending line. And this pattern is just forming inside of that to kind of, show you, confluence. So you have two confluences. You got the larger trend line, and then you got the little mini triangle that's showing up here. Now, in addition to that, there's another pattern forming, which is bullish. Let's just double check this. That was the larger breakout. Let's just leave that there. I guess right now we're somewhere over here, so that would be for the breakout of that channel. But within the price action that we have right now, there's a pattern here that's bullish. So it's a good thing, but it's lining up with the A and the B of this triangle. It's considered it's a crab pattern. So we draw it like this. We draw it from here down to here, up to this peak right here, down to this down here, and then we come up here. Now coming up here, this isn't complete yet, but the pattern target is 137.2. So it falls certainly within at the upper bound of our target that we had drawn in here, somewhere around 7.2. And right now it's saying that, it's kind of, until this pattern is completed, it kind of just tracks the current candle. So it keeps moving to the right. And you can see here, we got this breakout of this channel that's going to push it up higher. We can have a breakout of this triangle, which would be from the X to the A over here. I'm drawing it on the right, but I'm following this peak up here and this bottom here to draw this. So now I just don't want to deal with the little magnet over here screwing me up. But so basically you could see it's basically from the pivot high to pivot low. The first pivot within that triangle defines this pattern target. And if we put it over here as the breakout, then we can see it's on the lower end of the D. The D's suggesting that it can be up to there, but it could be the range on the D entry starts at 346. So 346, almost identical. So it's the pattern being completed is basically at our target that we have set for this pattern. Basically, when this breaks out, it's going to push up to here, and once it pushes up here, that's going to complete this. Now, this pattern itself is bearish. But in order for this pattern to be real, it suggests that the price action has to come up to this level. So, playing the breakout and playing the targets up here, if the idea is that this pattern is going to complete itself, it's suggesting that price action can move up to this level. So somewhere up in this level. So again, as always, let's pick that level. That's the previous high here. That's going to be an area of sell. I'm going to get rid of these because these are a little too close to the breakout levels to matter. We're at the 1 hour. So certainly this would be our first sell. And then, you know, we got this little pattern. You know, maybe we're going to sell before that D is hit. So you'd want to put one somewhere over here. And then finally, you know, over here. So as I mentioned earlier, what you're waiting for now is a breakout. Get rid of this. You know, breakout test. And then, you know, again, as it starts hitting these levels, you're probably going to see it testing, going up, testing, going up, testing, going up, right? And each time when you enter the trade after this check, now you're going to put your stop loss a little bit below this trend line. When prices pushes up, if you decide not to get out of your entire trade, I would consider getting out of a portion, at least maybe 25%. Then you would set your next stop loss here. When it hits this next threshold, move your stop loss up here. You know, always wait for the bounce. When you see the bounce and it starts taking off again, that's a signal to you that you could be safe enough to put your stop loss up here. What you're doing is you're going from, you know, once it starts moving away, like over here, you're going to bring it to break even. So at that point, you're not losing any money. When it bounces up here and it breaks through this high and it checks it and continues higher, now when you move your stop loss here, you're going to guarantee yourself, you know, a profit from here to here, whatever that ends up being, whatever that number is. Now, if price action changes direction and comes back down, you guarantee you know, some money. You know, this is guaranteed money on your trade. So maybe you know, maybe you got stopped out or whatever, but you took a profit. That's the most important part of trading. And so, for example, if you get out 25% and the stop loss doesn't get hit and it moves up higher, then when it checks and bounces off again, you move your stop loss up here. And then at that point, now you've increased your profit level. So now you got, you know, your entry to this level, and this is what you made in terms of profits from there to there. And you just continue that path, you know, continue moving your stop loss higher as you get the bounces. You know, price action doesn't move up just straight up, right? Let me see if I can show you an example of what I mean here. Oop. All right, so for example, and this isn't, you know, this is just showing you how things could work. You see how, like, maybe you traded the breakout right here. You know, it broke up above this high and you entered your trade. So, you know, you could see price action came up, came back down, and then went up, came back down, and then went up. So each one of these, you know, if this was your breakout trade, you would have put your stop loss here, and then when it came up and checked back down, you know, you got your stop loss safe. Then it pushes up higher, comes back down, and then starts bouncing back higher, then you would move your stop loss up here. So this is just a prime example of how price action moves. It goes up, comes down, goes up, comes down, goes up, and comes down. And you just continue doing that. So now here, you know, unless you were smart enough to get out at this resistance level up here, which would have been, you know, great if you were able to do that and figure that out. But if you wanted to stay in a trade and things went south, right here, you would have got stopped out. As price action turned on you and started coming back down, you would have got stopped out of your trade. But from here to here, you would have locked in a guaranteed trade profit. So your trade would have been profitable. Yeah, you could have made more up here if you would have sold. But even if you didn't, even if you thought it was still going to go higher and it didn't, you still guaranteed yourself a profit. And you can't lose by winning, right? So take the small wins, compound your account, continue doing it over and over, and you'll become a successful trader. So this is the same kind of thing I'm suggesting here. When you start seeing these breakouts and price action start moving higher, consider doing the same type of stop loss increment, you know, incrementing your stop loss based on price action bounces. It's not going to look so pretty like I have drawn here, but you could see back here how the bounces did happen. It came down, boom, came up, came down, boom. and then the top was met and it just turned south on you. Now, if you wouldn't have had this stop loss moved up here, you could see it came all the way back down here, even below, like you would have been getting scared that now you're negative. And if you would have held further, you had another chance to get out. But in the end, the trade would have went even more south. So now over here, instead of getting out when you got, your stop loss up here, now you'd be down in here. So now from here, from your entry to here, this is negative. You'd be down. And now, depending on leverage and everything, now you're going to get more leverage cost of money for leveraging, and you're just going to have to sit it. You're sitting it out, not sitting it out, but you're holding this longer and longer, and it went even further south. But finally, it came back, and then you did okay. But look how long this is on the 1 hour, but look how long you would have had to weather the storm, and if you're on leverage, this right here could have blew your account. So just be smart with the trades on the upside and the downside. If you notice here, I'm kind of biased to the bull side. I don't talk about shorting too much with crypto. So, just apply the same mentality on the shorts. If you're shorting something, do the same thing. Continue moving your stop losses lower to lock in the profits on the downside. Again, maybe I'll talk a little bit more about shorting, but it's just against my personal belief with cryptos to trade on the negative side. And I know I mentioned it earlier. I got to work on that because everything's not going to go up forever. And there is going to be a bear market. And unless you could trade the downside of crypto, just like you're trading the upside, you're leaving a lot of profits on the table. So I have some time. I think I got 2021 to figure that out for myself. So I'm trying to get that mindset in there. And typically in a bear market, all I do is just dollar cost average into the top cryptos that I like, and I don't worry about trying to trade them. I just build the position for when the market turns and it goes bullish again. And if it's going to last a year, then I have a year of dollar cost averaging for longer term trades, and I get away from trading from day to day on cryptos. I trade Forex very often. So during those times, I focus more on Forex trading. I haven't really dipped back into stocks. I used to do that years ago, options, all that stuff. But I've kind of gotten away from that and kind of just focus more on Forex and crypto right now. So with that being said, again, this video is getting a little long, but you got the timestamp. So what you want to do here is wait for this breakout. Wait for the price action to come down and check this bigger going trend line that's kind of in line with this triangle. So make sure you wait for the price to come back down and make sure that it was resistance on the way up. Now it's support when it comes down, and then you start seeing price action pull away again with volume. So you got to look for the volume. You got to look for something that's going to peak above the average. The average is like right there. Now, again, I'm going to put a trend line there, but a line there, but it's going to change when I move the chart. But my point is like right there. If it peaks above that, like somewhere like this, this is the type of volume that you're looking at to confirm a breakout. So just like before when we had the triangle drawn, price action came out of it, but there was nothing saying that it was going to be an impulsive move out like it shows here. This is an impulsive move. This is what you're looking for over here. If you see this type of volume and it breaks out here, like right now we're kind of hovering outside of it here. But that's, again, because I think we drew it on the 4 hour. Oh, this is getting a little messy now. Jesus. All right. Let's zoom in here. So right now we got another hour and a half on this candle, but we are hitting a critical moment here. And again, what I might be compelled to do here is put it up on this wick instead, because it doesn't seem like this is going to be You know, volume is increasing a little bit, but it's not really increasing it to a point where I believe it's going to be a breakout, although it is testing this trend line as well. So you might want to just kind of keep it like that to be safer. You know, go to the 2 wicks and then wait for that breakout. All right, so that's really all I got to say about Cardano. I'm very bullish on Cardano. I have a long-term hold on Cardano. I haven't really been trading it per se, but very easily $1.50 up here. So hang on one second. I'll be right back. All right, guys, I'm back. I'm sorry. I had to use the bathroom. I got myself a cup of coffee. All right, so that's all I got to say about Cardano right now. Just wait for the breakout. Wait for the volume. Again, I'm just kind of suggesting this kind of volume to confirm it's truly a breakout of a pattern and of this other trend line. Otherwise, it could just be sideways consolidation further. So just because it's coming out of this triangle, maybe this isn't a triangle pattern completed yet. So we just got to continue coming in here and checking price action. Again, here's some targets. I talked about this already. So let's just move on to the next coin. All right, next coin is Bitcoin. All right, we had some stuff here drawn. It looks like it came down and checked. It actually hit the negative 236 target as we kind of suggested based on this fib retrace, this extension. This is where the algo targets were driving this, so it got here. We do still have an upward target on D, so there's a chance. Looks like there's a wedge here, actually, a downward or a flag, whatever you want to call it. So you saw the impulse here, and now it's kind of tapered, and it looked like we kind of missed it, but that is a breakout of that pattern. So you could draw this like this, and then over here. Yeah, this is a nice classic one. This is very nice. So you can see the impulse from this is the flagpole, right? Bullish flagpole. So then you just kind of take that and you put it over here at the point of breakout, and look, it's kind of, again, it's suggesting it's going to hit up into the 60s. So it currently is breaking out. We don't have a confirmation yet at this lower level. Let me get rid of this. You know, really you'd want to see this come back down and check this like this. So you got the breakout here. I hate this magnet thing. But you got the breakout, you got the volume. So this is a legit breakout. Unfortunately, by the time this video is coming to you, it already happened. But if you didn't get into this trade before I'm sharing this video, wait for the pullback. This is where you should consider waiting for a new entry. You missed that. There is volume. Let's see if price action comes down and checks it and goes up. So this is the area that you would be looking to possibly get into a new trade, which is 57,760. So that's how you play this immediate bull flag target. You know, it's looking like 60,500. Again, you're going to have some resistance up here. Actually, I don't know if you're going to have resistance. Let's go out to a higher time frame to see where the resistance will be. I do that all the time. You would think I would know how to not do that anymore. Yeah, I guess you got this on the daily as a previous peak, but again, this is all kind of new price action, so I don't know how much resistance is going to be here, but you should be smart on the breakout of that pattern we just had to consider taking some off the table. You know, round numbers, psychological numbers like 60,000 is always going to be a point of contention. Will it break through? Will it won't? You know, also realize it's completing this bearish pattern that we have on this chart. So, you know, after it hits this after it hits this D, this bearish pattern's completed, so you might see price action come down and do a retrace of this pivot. You know, when this is completed, this is going to be a new This is going to be a new low to high pivot, which you can see, you know, once this comes up to here, this is the pivot, and it could come down, it could come all the way back down to here. So, you know, be smart about getting out of your trade if you get into this little mini bull flag. Be smart about getting out up here, because this is where price action might roll back over and come back down. You know, and it could come down again. It could come down to these levels, 0.5 to 0.618. So lock in some profits. Wait for the retrace. Again, this Elliott wave seems very nice here. You got the 1, 2, 3, 4. You know, so everything points to higher. So once this 4 pushes up, like it's showing right now, you're going to have a 5 completion. And then there's going to be an ABC retracement. So that ABC retracement might bring it back down to here. So just be ready. Be ready to take profits. Don't get greedy. Take the little, you know, get out a little bit before 60,000. It would be what my suggestion is. If this is purely a trade. If this is a long-term hold, then you decide what you want to do. But if this is just purely a trade, you know, there's... If not at 60,000, you know, take some more at this all-time high. So take a little bit here, move your stop loss up. That's the important thing. As long as you move your stop loss up, you could take a chance and leave some skin in the game for it to go even higher. But, you know, if you just leave it open-ended, you can enter here, you could find it hit 60 and then very quickly drop back down below what you entered, and now you're negative. So why would you want to do that, right? So you got to be risk management. Don't get greedy. Take your profits and reset for the next trade. All right, so that's all for Bitcoin. Again, like I said, it's breaking out of this wedge, this downward facing bull flag, or descending wedge, or whatever you want to call it. And the target, like I said, first target for sure to get out a little bit below the 60K, and then for sure the all-time high. You know, maybe 25% here, 25% there. And then you still got this. So just like this last, one was hit right here, the negative 236. If we do push to 60, you know, up here, this is a new target for the algos. So we could see Bitcoin go up to 62. We don't know. No one knows. So play proper risk management, move your stop losses higher and higher. If you want to let it breathe, let it breathe. But don't, you know, at least go back, at least make your trade break even so that you have no chances of losing money, and you leave your open-ended, you know, to make more money if that's what you want to do. All right. So for sure D, and then up here at the all-time high, and then of course this is where the algos are pushing the price action to. So this might be another, you know, right above here. It's not too much difference, but it's, you know, if you take 60,000, you know, just be smart. Dollar cost average out of your position, just like you dollar cost average in. So these are 3 levels on the upside, you know, that I would certainly consider taking some stuff off the table, and do proper risk management with the stop losses. All right, so next one. Ethereum. All right, so Ethereum has, let's see here. Ethereum does have a little pattern that's forming pretty much where we have it right now. So it's the same pattern, actually. Yeah, the pattern's still active. So nothing really else to say here. So what I wanted to show you at the lower time frame here, maybe it was a higher time frame. Let's just zoom in here. You see how this cross right here, downward and upward? Remember I mentioned, you know, you get reactions. So this was the point of no return, which was a cross where price action had to decide if it was going to follow the upward going pitchfork or the downward. But you can see right at this cross right here, see that momentum that pushed up right on those 2 pitchfork crosses? Happens a lot. Happens a lot. Look at this, another one right here. So very close. Sometimes it's not exactly on there, but as you approach these crosses, you know, basically what I think is happening is you get compelling algorithms fighting each other for direction, because one's saying it should go down and the other one's saying it should go up, and then sooner or later one of them is going to win and push the price in their direction. So it's the computers fighting each other. But you could also see here something that actually happened. You could see we formed that inverse head and shoulders down here. See this? So if you put the neckline area, you know, somewhere around here, the way you figure out the target for this inverse head and shoulder is you go from the neckline down to the head. So take a trend line and you just come down here. This would be once it breaks through the neckline, this is the target, and you could see here the target's going to push it right to the upper bound. If the target is met for this inverse head and shoulders, we're going to approach a breakout, you know. So just wait for the check and go up. We got the momentum, we got the volume coming in here, so just got to see if it can pass through some of this traffic here. You know, this look at this head and shoulders that we completed on the downside. So now we got an inverse one, which is it's bullish. Although, you know, so a head and shoulders also like almost like a triple bottom, right? So you got the W trending downward. If you draw it out, let me just draw a couple things here for you. So you see this? This is a W, but it's facing downward, which is not the ideal case. It is a bullish. It's considered a double bottom, but it's angled downward, which is not the ideal case. What you really want is you want the other W that formed with so basically head and shoulders is two W's, right? The inverse head and shoulders is two W's. You got one here, and then now you got this one, right? And this is the good one because this is facing upward. So this W facing upward is, you know, is a subset of this overall pattern of the head and shoulders. So this is a very bullish double. This is also considered a double bottom. You got the bottom here and you got the bottom there. So you got the head and shoulders made up of two double bottoms, right? You got the one that's downward facing and you got the one that's upward facing. So this was a very bullish signal. When you get a bottom, another bottom, you got the inverse head and shoulders. We got the pattern, you know, target over here. Now we're still, you know, if you got into the trade at the neckline, then you're in a trade. So right now you should have a stop loss here. You know, right here you kind of see how price action kind of went up and kind of went down, and now it's heading back up. So now you should consider moving your stop loss here. Now, you know, again, if you're in a trade, it's not very smart to do inside patterns, but when you're dealing with a 4-hour or a daily pattern, there's always sub patterns in the pattern. So this was something you could have traded if you saw it. And you can see here, this breakout of the neckline also coincided with that cross that we talked about, this circle that had two different directions of pitchforks happening. So everything kind of came together here to suggest that, you know, we could look for a breakout here based on this cross plus the formation of a double bottom, you know, a W, and also the inverse head and shoulders. So, you know, the W pattern is the same kind of thing. You take the distance of the W from the neck, you know, from here down to the bottom, and you basically get the same target from the head and shoulders. So I guess what I'm trying to say here now is either you're in a trade and you're moving your stop losses higher, or now we're still waiting for this breakout to happen. So, you know, the pattern target from the head and shoulders takes us to this trend line, and then the breakout from there takes us all the way up to the D, which is the pattern target from this triangle. So once the D is hit, you know, even along the way, you should be considering taking some profits. So for example, this peak right here at 2047, you know, on this breakout, that would be an area that I would consider taking some profits off the table. You know, at basically the peak right here, you're trying to break past that that level. Then, of course, you know, the next obvious one is the D. I mean, the pattern targets. You know, certainly consider taking some off the table there. Now, again, just like I mentioned in the last chart, and I'm mentioning it again here, as these breakouts are happening, so you know, you're going to get into a trade when it checks and pulls off. Once it breaks through this high over here, this X, which coincides with this little green area, you know, you're going to see something along the lines of this again. Then it's going to go up more. When it does that bounce and checks and goes, then you should be moving your stop loss here. Same thing goes up here. When it comes up and it bounces through and goes up, move your stop loss here. That way you're giving yourself the breathing room. Maybe you took a little bit off the table and now you put your stop loss here. So now you're not a losing trade no matter what, right? Because you got in somewhere over here. And now with this bounce, you put your stop loss here, and there's no way you're going to lose the trade. And you're going to allow maybe some more price action in the upward direction to make more money. And then once the bounce, you know, even in here, even in these intermediate steps to get up to here, you might have opportunities to continue moving the stop loss higher and higher as it goes higher. So every step that you move that stop loss higher, you're guaranteeing yourself more profits. So again, I showed it, and I'll show it again. Every time you do that, you're increasing your guaranteed profit on the trade, and that's what trading is all about. You could let the price go, but continually move your stop loss higher so that you're not going to lose the trade. You don't want to go from a positive trade to being down. And with all this manipulation and all this crap that we're hearing, you know, all this stuff that goes on with futures and everything else, and mining groups dumping stuff on the market, it's just a bunch of manipulation. So you gotta proper risk management. You have to follow it. You have to. Otherwise, you're gonna blow your account, and you're gonna have to start over, and you're gonna get frustrated. And for the wrong reasons, you might just walk away from it and not do it. Whereas if you were just a little bit more conservative and you follow the risk management, you will be surprised how much your account will grow just by taking the small wins. By me being able to do all these videos for you, it should be pretty obvious now that there's always going to be another trade. Don't chase a trade. If you're late, let it go. Wait for the retrace. Wait for the bounce. Wait for the Fibonacci. Put a Fibonacci on the pivot. Wait for it to come down to 0.5 to 0.618. Then it's a higher probability that it might push higher. And you got to decide what the trend is. You got to take a step back and see if you're in an uptrend, downtrend. Don't trade against the trend. So right now we broke out of this downward facing pitchfork. So I would say it makes sense to stop drawing with a brush. I did it again. All right. It makes sense to maybe get rid of this downward facing pitchfork because it broke out. You can see it's not following the downward one already, so this might be gone. You know, it doesn't make sense anymore. Now we still have this one going. It's staying in here. It hit the median. You know, the 80% chance once it pulls away about 15 to 20%. There's an 80% chance it'll hit the median. You know, price action is still going to be driven to the median. The median line is lining up nice with the previous high here of 2044. So, you know, that's also, you know, there's price action gravitates towards the median. So no matter how, if it's up, it drives it back. If it's down, it drives it up. You know, it's always tending towards the median over time, the average. All right. So just wait for the breakout, wait for the volume. You know, look for a volume to peak up like somewhere over here, like this kind of volume. that'll give you a good indication that it's a true breakout. So when it approaches this trend line, if you see volume something like this at this level, you know, it pretty much signals a good breakout. Not down here, not down at these levels, but up somewhere up in these levels or even higher would be better. You know, you got some over here pretty high. So ideally something like this, or you know, maybe even these would be okay to confirm a solid breakout of this triangle. So I wish you guys the best on this. Again, I'm bullish, so I expect this progression to happen. Let's see how it plays out. Next video we'll clean all this up. Once the breakout happens, we'll have to reset and see where we are. But for sure, maybe this pitchfork can stay on the chart, but some of these other things will have to get scrubbed and deleted, and we'll reset. So, but now just wait for the breakout. You know, current price action. You're looking like $1,900 for the breakout. So, best to you guys. All right, next one. This is linked, not LinkedIn, but Chainlink. Chainlink has, well, it hit, you know, we still have, I don't think it hit yet. No, it didn't hit yet. But we do have a inverse head and shoulders that's in play. This is the target for that, which suggests that it's going to break out. Right now, we have to tweak. We have to tweak this upward facing pitchfork to align with the touch right there. So that's how you would go back in and you would adjust this as new price action kind of tells you what's happening here. Kind of just adjust it, and you can see it's pretty darn close to you know, you can see there was resistance right there. You know, some downward one this way. You know, it's playing back and forth here. Again, this pitchfork that's down facing is not complete yet until the price action hits D, right? This is just an anticipated pitchfork on the downward slope based on the XCD path on this pattern. So still in play here. We're still kind of waiting for the big picture breakout. You know, if this target for the inverse head and shoulders is going to be hit, that's going to suggest a breakout of this pattern. We want to see higher volume, something like along these terms up here. Bigger volume is better for confirmation of a breakout. So we're still waiting for this. We're still kind of in a holding pattern here. Nothing else to really say right now about Chainlink. So just be careful if you're trading. You know, so this reverse head and shoulders did pretty good. I mean, it had like a double shoulder here, or maybe you just redraw this to kind of reflect this. So you can see here, actually, you can see a little mini W pattern as well, right? You can see it go here, 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 and then up, and it is tilted up. The first low, the second low is a little higher than the first low, so this is also a bullish indicator. You know, like I said over here, this is the 1W pattern, right? This is facing downward. This isn't so great. But when you start getting, you got the second one that's tilted upward, that suggests price action is going to reverse and go higher. So from this immediate price action, this is a kind of a reversal pattern. So unless you're in on the W or the head and shoulder pattern, you're waiting for this breakout to happen. Right, and then you're gonna wait for it to check, and then you're gonna take the trade once it checks. And here are some of the previous. Oh, again, the brush. Let's dive up to a higher time frame. So we got the head and shoulder target, which will complete the D, and then the D suggests a little bit of a bearish influence on price action. So right now, we're using the D to kind of suggest where it can go, but once it goes there, it could retrace. So just be careful. Make sure you wait for the confirmation here before you enter a trade, because the D is signaling this pattern is a bearish pattern. This bat pattern that's not completed yet. But again, the idea here is that we're using that to say, okay, well, if that bat pattern is going to complete, then we know that price action has to come somewhere up in the $30.50 range. So we use that to our advantage. Like, for example, for this breakout of this neckline, for sure we could consider taking some profits when it hits the D based on this trade. Right? So maybe it hits the D, and that's how it comes back down a little bit and checks and then goes. That wouldn't be too much of a retrace, though. You know, if you want to figure out the retrace on that D, so once this D is settled, if it actually goes to where we think it's going to go, you know, if it retraces more than 15%, we're coming back into this triangle, and it might have been a fake out, you know. So then in that case, you know, we have to come back here and we got to revisit. All right, well, maybe this was really up here, you know. And actually, based on the D, I would actually suggest that maybe that's where it should be right now. This is probably the pivot for the triangle. So let's keep that there because it lines up very nicely with the D. Let's keep it like this. Let's see, you know, price target. If the D completes, unfortunately, it suggests that it might come back down here. It might come back down here before it finally decides to come back up and break out. So this might not happen at the D. You know, we're going to get negative bearish momentum probably at the D. So chances are we're going to have to move this. You know, maybe it moves to this cross, you know, of the two directions of the pitchforks. Maybe that's where the momentum will come in, and we could take it higher. So let me get rid of some of this and just kind of show you what I mean here. I'll leave that. Let's get rid of that. Oop. Nope, I didn't want to do that. Alright, so basically what I'm saying here is this current price action, you know, might, you know, find its way up to this D level or close to it, depending on how quick it happens. Then we might see it come back down, and it might come back down all the way down to the 0.5. You know, it might go a little lower down to the 0.55, or it might go as low as 0.618 or 65. Then we might get the push out to this target up here. So just consider that. You know, if you're in a trade, consider putting a target, depending on how long it takes to come up here. This trend line is going to be a resistance for the price action to go above it. So just consider moving your price target down the longer it takes if you're in this trade, and take a little bit off the table, because it might hit this and it might come back down before it finally goes up. You know, on a broader picture here, typically the triangle pattern, they call it the apex. Usually the breakout happens 80% of the distance in here. So from here to here is this is the peak, the point. Something has to happen there, but most of the time it starts happening around 80% of the travel distance in this pattern. So somewhere over here, just by eyeballing it, makes sense for a breakout to happen, and it kind of coincides with these pitchforks. So we'll see what happens. But right now you're waiting unless you took the trade on the inverse head and shoulders. You're waiting for the breakout of the triangle. And that's really all I got to say about this pattern. All right, so that's it for now on the updates. Again, you know, it might sound repetitive and everything, but you wait for the breakout, wait for the volume confirmation, use proper risk management. Once you can, make sure you put your stop loss to break even so you don't lose money. Move your stop loss higher as price action breaks out to guarantee yourself some profits in case price action changes direction. And just be smart. Just be smart and don't go for the kill, because the kill will kill you in your account. So just be smart, protect your equity, take the profits, take a step back, wait for the next trade. There's 4 trades here. There's going to be another trade right after the trade that you enter and exit. There'll be another trade. So don't get anxiety that you're not in a trade. Just take the money, lock it in, lock in your profits, and then reset. All right, guys. So again, just consider subscribing to my channel. Make sure to click the little bell. Like, share on social media this video if you think there's other people that you know that might be interested in the technical analysis of these coins. And then more importantly, when we hit 2,000 subscribers of my channel, I'm going to do that giveaway. So stay tuned for that. Later today, I'm going to do a I don't know where it went. Oh, I had my channel here, I thought. Oh, this is it. So later on today, I'm going to do a update. I'll have another $100 to compound in here. So if this is an opportunity and a stream of income that you're interested in, stay tuned. I'll be putting another video out for this when the $100 hits the account and I can compound. So look in the video description if you're interested in learning more about this one. It's this right here. So again, stay tuned for another video. I'll put a video out of compounding, and I'll talk about some of the things that's associated to this opportunity and how you could, make passive income or build a team if that's what you want to do. But you don't have to build a team. So stay tuned for that. Thank you for watching the video. Thank you for being a subscriber. If you're a subscriber, if the first video that you're watching, consider subscribing to my channel so that you can follow the new videos I put out. Please comment. Let me know what you guys want me to talk about. And have the best day. And I wish you guys much success, much wealth, and happiness. More importantly, money doesn't buy you happiness, but it certainly makes the ride getting to be happy a lot better, as they say. So, all right, take care, guys. Until next video. Guys and girls. I keep saying guys, but just so you guys know, I mean both. I just kind of use that term to just any of my subscribers, anyone watching my videos. So don't take it personal. It's nothing like that. All right, take care.